Okay, so we have this paper today. We are going to solve this Feb March 2026 paper. This is paper 1 and variant 2. Okay, so let's see. Okay, so the first question is that what is the role of bookkeeper in providing information for monitoring progress and missing in the Okay, calculating accounting ratio. No, this is basically the responsibility of accountant. Preparing books of account, yes, this could be the right answer. Preparing statement of financial position, making final accounts is the responsibility of accountants. This is not right answer. Preparing an income statement is also a type of financial like final account. So this will also be prepared by the accountant. Okay, certainly the B option is right. Then, what is the amount owed by a business? Owed by a business to its owner. Okay, owed by a very easy. Definitely owed by a business to its owner. It means that the amount which owner usually invests in a business. So that is basically the amount which owed by the business to its owner. This is capital. Then where is the discount total from the payment side of a cash book posted? Okay, so this is like the discount total from the cash book will be posted to a journal ledger actually. So A option would be the right option. The discount received account in the purchase ledger, but in the purchase ledger we will record only the discount from a certain supplier, not a total discount allowed. Okay, this is not the question relevant to discount allowed. Then again, it's this D part is relevant to discount allowed. The person is not asking about the discount allowed. Okay. Then we have question number 4, that a check received by the delivery from the Martinez was subsequently dishonored. Okay, how would the dishonored check be recorded in the books of account of February? So Martin is basically customer for the February, and this check has been dishonored. So which entry we will make? We will debit the Martins and we will credit the bank since the check has been dishonored. So that's why the bank will credit, because definitely previously we debited the bank, but now since the check has been dishonored, so that's why we need to reduce bank. And then again we have to increase the Martins, means increase the customer. C option is the right option. Okay, then we have next question, that Sarah purchases goods from the goods on credit from the Zola. Okay, so Sarah owed Zola $400 on 1st May, and she paid this on 1st May after deducting a 5% cash discount. Sarah made further purchases costing $280 during May. What were the opening and closing balance of Sarah's statement of account for May? Okay, statement of account is basically uh, you can say that a source document where you can provide a proper summary between the summary of transactions between you and your customer. So since Sarah owed Zola $400 on 1st May, so that definitely opening balance is 400. So it means that this answer could be right and this answer could be right. Okay, so and then she paid it after deducting the 5% cash discount. So 4 multiply 5%. So the total discount she got, that is $20. So it means that total amount which she paid, this will be like 380. But the full debt of 400 is cleared. So then she made further credit purchases of $280. So it means that the closing balance is $280. So the C option is correct. Okay. Then we have question number 6. They're saying which business documents are used to write up the sales journal and sales return journal. Okay. So for the sales journal, we will make the invoice issued. So this could be right, this could be right. Yeah. Because for you are making sales now, means that you are selling something, so you will be issuing the invoice. You will not receive invoice. So the sales return journal is written from the credit note issued to the customer. So credit note issue, credit note issue. Okay, only this option is right then. So sales journal, for the sales journal we issue the invoice, and for the sale return journal we use credit note issue. So B option is the right option. Then we have question number 7, that Jaswinder maintains a petty cash book using the Impress system, and the monthly interest of 100 is restored on the first day of each month. In September, the petty cash book showed the following total expenses were received. How much cash did Jaswinder need to restore the interest? Okay. So interest amount is $100, as you can see. And total expenses are 83 and total receipts are 7. So it means that 83, which is total expense, minus 7, which is total receipt. So it means that the actual cash we use, that is $76. This is the actual cash we used. Okay. So the Swinder needs $76 basically, because out of 76, so definitely he has to add the 76 back into the remaining amount so that he can restore that impressed amount. Okay, so the Swinder needs $76 to restore the petty cash back to $100. So that's why 76 is the right answer. Okay, then we have the next question. Question number 8. They are saying that which statement about the trial balance is not correct. Okay, it can help elongating the arithmetical errors. So yeah, can say yes, it actually help us, because definitely if the trial balance will not balance, its debit side and its credit side is not balancing, so then this is really obvious that you know it means, oh, I was not sharing my screen. Okay, now you can just see the above questions which I solved. Yeah, I'm sorry I was not sharing the screen. Okay, now we are going to see this. Okay, so yeah, so basically a trial balance is not an account and not part of the WT itself, so it is just a list of balances taken from the ledger account. So A is right, because definitely this trial balance will actually help you to see, okay, the particular errors. B is that it excludes the closing inventory. So yes, closing inventory is not usually included in the trial balance before adjustment. So this is also correct. It is a part of the revenue system. No, this is not the part of the revenue system. So C could be the right option. It is often used up to prepare the financial statement. Yes, definitely, because this is a kind of list of balances, the total of the ledgers, and we use it to prepare, the financial statements. So it means that the C option is the right option. Then we have question number 9. That purchase of stationery for office use for $50 was correctly entered in the petty cash book, but posted to the credit side of the purchase account in error. Okay. So which entry correct the error? So stationery expense of $50 should have been debit. We should debit a stationery account because this is a kind of expense for us, but it was wrongly credited to the purchase account. So to correct it, what we will do? We will remove the wrong credit from purchase. So what we will do? We will debit the purchase account. And enter the correct debit entry to the stationery. So it means that a stationery account will debit with $50. So, but we need total debit $100. So definitely on the credit side there is nothing. So it means that the suspense account will credit with the $1,000. So this will be credited. So it means that this option is the right option, the A part. Okay. Then we have the question number 10. They're saying Karina's income statement showed a gross profit of 24,000 and profit for the year which is 7,400. And she later discovered the following errors. First of all, the carriage inwards for 200 had been omitted. Okay. It is omitted. So we need to rectify it, I guess. And drawings for $2,400 had been recorded as wages. So what we need to do, we need to see that what was the what was Karina's correct GP and profit for the year. Okay, so let's talk about first of all the added one. So since the carriage inwards 200, so carriage inward is a direct expense, so it reduces the GP and it also reduces the net profit. So it means that the new GP will be 24,000 minus 200. So this will become 23800 and the new profit this is 7,400 minus 200. So this is equal to 70. And then if we talk about the added two, so drawings of $2,400 as recorded as wages. So wages are an expense, but drawings are not an expense. So the profit was reduced incorrectly by $2,400. So it means that we need to add it back. So it means that 7,400 plus 2,400. So the new profit is 9,600. So gross profit is not affected by drawings definitely because this is a wage error. So it means that the GP is 23,800 and the profit is 9,600. So A option is the right option. Then the next question is that which statements are correct? Bank reconciliation statement is a part of double entry bookkeeping. No, it's not correct. Bank reconciliation statement is simple a statement where we just rectify the mistakes, which is like definitely done by the bank. This is not right. Bank reconciliation statement is prepared by the bank. No, it is prepared by the trader. Bank reconciliation statement is prepared. Yeah, this is the right one. So B option is the right. Okay. Then we have the next person number 12. They're saying that on 31st January, Samraj bank statement showed a carrot balance of 740. You can see the positive balance actually. Comparing the bank statement with the cash book, he found the following. The bank charge is not recorded in the cash book, which is $30, and then check paid not presented to the bank, which is $150. So Maraj updated his cash book as required. What was the updated cash book balance on 31st January? Okay. So here, like it is easy question. Okay. Uh, 1 second, students. Okay. So what we need to do, we need to find out the updated cash book balance. Okay. Now remember that whatever the balance we have as in the bank statement is 740 and this is like positive balance. So as you can see that the bank charge is not recorded in the cash book. This is $30. So this we need to find out the total updated cash book balance. So basically whatever the balance we have in the bank statement is the same balance in the updated cash book. But there is one mistake. Now this $30 we did not record, but the bank already deducted that. So it means that this 740 is showing us the amount from where the $30 is already deducted. So definitely in the credit cash book we have to deduct the this error now. So it is already deducted from 740. Okay. Check paid but not presented to the bank. Okay. So since this 150 already deducted by the cash book but not by the bank. So this 740 is balance coming from the bank statement. So in this 740, 150 is a part of it. So if we will deduct this 150, so it means that we will get the same, you can say that amount, which is basically in the updated cash flow. So it means that you will minus this 150. So answer is 590. And since definitely this is like the positive balance, this is 590 debit. Then we have the next question, question number 13. They are saying that what is the purpose of preparing a SLCA, like sale as a control account? So to identify the recoverable debt, basically an irrecoverable debt are identified from customer accounts, not the control account itself. Then to make fraud more difficult. So yes, this could be right because sale as a control account helps check accuracy and make fraud or errors easier to detect. So this could be the right answer. Trade to provide the total owed to the trade payables. So trade payables relate to the purchases led the control account, not to the SLCA. To show total cash and carried sales. So control accounts do not show total cash and carried sales together. So that's why B is again wrong. Okay. Then a trader entered the following items in the purchase ledger control account. What we need to do, which entry in the purchase ledger control account is correct? Okay, so total discount received. Total discount received. Yes, this will be the part of it. And then which entry in the purchase ledger control is okay? Total interest charged by the suppliers. So yes, in the PLCA we record this. Then total of the purchase return journal. Yes. Total payment made to suppliers. Which entry? Okay, okay, we need to see this one. Okay. Credit of 19,200. Total the purchase return journal. Okay, so basically, remember that PLCA is a kind of liability. So whenever it increase, it will credit. Whenever it decrease, it will debit. So it means that when there is like 19,200, it means that the total purchase return journal. So this will be on the debit side, not on the credit side, which is wrong. Okay, and credit of 2,18,200. Total of the total payment made to supplier. So whenever you will pay, so it means that your liability reduced. This will be on the debit side, not on the credit side. Debit of 12,900. Total discount received. Yeah, this will debit because when you receive discount, which is 12,900, you don't need to pay that amount. So your liability reduced. So yes, this will be on the debit side. Then debit of 15,000, total interest charged by supplier. So if the interest charged by the supplier, which is 15,000, so your liability will increase. You have to pay more. So that's why it's not right. So C most likely is the right option. Okay. Then the next question is that a capital expenditure transaction was incorrectly treated as revenue expenditure. For example, we have purchased machinery and we have we should record this machinery definitely in the machinery account as debit balance. But what we did, we just recorded this capital expenditure as revenue expenditure. We made the asset as an expense. What would be the impact of this error on the financial statements? Okay, so definitely, since you recorded like how this will affect the profit for the year. So when you made this revenue expenditure, so it means that you just mistakenly recorded expense. So when you recorded expense, so you overstated the expense. So it means that your profit will be understated. And what will happen to non-current assets since you did not record this? So it means that you understate the asset. So this D option is the right. Okay. Then we have next question. That trader bought equipment costing 2000 on 1st January in year one, and it is depreciated at the rate of 45% using the reducing balance method. Which journal entry would record the depreciation for the year ended 31st December in December 31st December in year two? Okay, cost is 2000 and okay. So let's see first of all year one depreciation. So first of all, we will see what is the depreciation in first year. So this will be like 900 in first year. So it means that the book value is 2000 minus 900. So this is 1100. So the book value 1100. Okay. Then in the year two, now we will multiply this 45% with the book value because this is the reducing balance method. So this is like 495. So it means that what we will do in the second year, we will debit the income statement because we charge the depreciation. So depreciation we will shift in the income statement. So income statement will be debit with 495 and provision for depreciation account will carry with 495. So A is the right option. Okay. Okay. Next question we have. Trader was owed rent at the end of his financial year. How should the trader enter in his ledger? Okay. Credit the rent payable account with the amount owed and bring down the balance as debit balance. Okay. So this is like rent payable amount. Rent payable account. This is the expense account. So for the expense account, we use one mnemonic, and that is PAP. A. So what is happening? Trader was owed rent at the end of his financial year. So it means the balance CD will be here, and then this will come on the credit side. Credit the rent payable amount to the amount owed and bring down bring down as a debit balance. No, it should bring down balance as like on the credit side. Okay, so this is not right. It means credit the rent receivable amount with the account with the amount owed and bring down a balance with a debit balance. Credit the rent receivable account. Yes, we will credit it. And with the amount owed and bring down as a debit balance. A trader was owed rent at the end of his financial year and his ledger. Credit the rent receivable. Okay, this is basically trader was owed rent at the end of the financial year. Okay, so this is basically not the expense account. This is basically the income account. Yes, it is income account, and then we will use the different mnemonic, that is APA. Credit the rent receivable amount account with the amount owed and bring down a balance to the debit balance. So yeah, this we will be writing it here. At the end, the amount owed now, so that's why this is like accrued income. So this will be here in the next month. So B is most likely the right option. Then we have the next person that at 1st January, sorry, at 1st January 25, uh, Domino, Dominico has a provision for a doubtful debt of $760. Okay. At 31st December, the trade receivable is 22,500. Provision for doubtful debt is maintained at 5%. Okay. So what are the entries in the provision for doubtful debt account at 31st December 2025? Okay. So here, as you can see, that the provision for doubtful debt at the start of the year is 760. Okay. And then at 31st December, the traceable is this, and provision for doubtful debt is to be maintained at this. So first of all, let's see what is the provision for this year. So this is equal to 1125. Okay. So 1125, definitely by 1125, the provision account will carry it. The provision for doubtful debt, this will carry it. But whether the income statement will debit or credit. So we have to see that we need to compare the previous year, the amount for the provision for doubtful debt and this year. So as you can see, the provision has increased, and it has increased with 365. So remember that when it increased, so it means this was okay 760 and now it's 125. Yeah, definitely it has increased. So when it has increased, so it means that the income statement will be at 1st January, 31st December 2025. Provision for let me check this again. Yeah, so basically, income statement will be debit by 365 because the this has increased now. The expense has increased because previously that the provision for doubtful debt was 760 and now this is 1125. So definitely it has increased with 365. Okay. Then what is the correct basis of the inventory valuation? Yeah, definitely at the lower of cost or NR. So D option is the right one. Then we have question number 20 that whatever this name is. So Giordon is a manufacturer, okay, and he made errors in valuing his inventory at the year end, and his work in progress was understated by the $2,000, and his inventory of finished goods was overstated by the $3,500. So, what is the effect of this? What is the effect of effect of these errors on the cost of production and also on the cost of sales? Okay. So first of all, let's talk about the error one. So if you see like error one, work in progress understated by the $2,000. Okay. So closing work in progress is deducted when calculating the cost of production. So if the WIP means work in progress is understated, so reduction is too small, definitely, and the cost of production will become too high. So it means that the cost of production will be overstated by 2000. Then if you see error 2, so finished goods inventory overstated by the $3,500. So closing inventory reduces the cost of sales. So if the closing inventory is overstated, so it means that the cost of sales becomes too low. So the cost of sale will be understated by the 3,500. So B option is basically, uh, 1 second, 3,500. And his inventory of finished goods was overstated by 3,500. 1 second. So cost reduction was already overstated by 2,000, because as you can see that here, when the closing inventory is overstated, so cost of sale become too low. So cost of sale is equal to 3,500 understated. But the cost of production was already overstated by 2,000, so which also affects the cost of sales, because we need to write this into the cost of sale as well, like the cost of production. So net effect on the cost sales will be like 3,500 minus 2,000, so net effect will be 1,500. So it will be like understated with the $1,500. So then A option is the right. Then we have question number 21. A sole trader paid off the business overdraft using his own personal funds. How did this affect the statement of financial position? Okay, so um, bank over as a liability, so definitely it will decrease. Honest capital increase because additional capital introduced. That's why. And assets, there will be no effect because business bank did not receive cash. So it means that the C option is the right one. Then we have question number 22, that Zaha is consultant who receive fee from the client. How would Zaha calculate his profit for the year? Okay, so this is easy. Definitely, we will write income and minus expenses. Then a partnership agreement contain rules as decided among the partners, which does not contain a typical partnership agreement. Okay, so interest on partners capital, yes, it is already decided. Interest on partners drawing decided. Partner salaries decided. Partners current account balance is never decided by them, because this can be like changed every year. Which items are included in the appropriation account for the partnership? Okay, interest on the partners drawing. So yes, partner salary, uh, yes. Interest on partners capital, yes. And then partners drawing, no. We will only include the interest on partner drawing in the appropriation account. So A option is the right. Then which statement describes the benefits of the limited liability? Okay. Shareholder in a company disclosing only their personal possessions. Limited liability. Shareholders in a company disclosing or their, no, there's no personal possession law, fear of losing. No. Shareholder in a company is losing only the amount they agree to pay for their share. Yeah, they will be like losing their invested amount. Okay. Then we have the next question. Question number 26. They're saying that at the start of its financial year, a limited liability company had these balances. We have the ordinary share capital $250,000, in earnings $75,000, and then general reserve is $18,000. So profit for the year was 38,000. Sorry. During the year, dividend of 4% was paid and 8,000 was transferred to general reserve. What was the total equity of the company at the end of the year? Okay. So, opening equity is evident because as you can see that we have the opening balances, we have the ordinary share capital, and then we have the retained earning, and then we have the general reserves. Okay. So the total equity, opening equity is 250 plus 75,000 plus 18,000. So this is equal to 3,43,000. So now we need to add the profit for the year. So as you can see that this is a profit for the year. So we need to add it here plus 38,000 So we paid the dividend, which is 4%. Like they're saying dividend of 4% was paid and 8,000 was transferred to the director. Okay, so you need to like multiply this 4% with 250,000 because we have paid this on the ordinary share capital. So 250,000 multiply 4%. So this is equal to 1,000. So it means that we will minus this one. Okay. And yeah. So transfer to the reserves definitely does not change total equity because money is not going out from the business because it's just moving money within equity. So if you just see this, add this 38,000 minus this 1,000, so this is equal to 3,71,000 total equity. Okay. Question number 27 that which item would reduce the balance on sports club receipt and payment account. Okay. Depreciation of sports equipment, this we will record in the income and expenditure. So this will not reduce the receipt and payment account because receipt and payment account is kind of, you can say, cash. Okay. Then overdue subscription paid by a member. So it will increase it and you will receive money, not reduce. Payment for new sports equipment, definitely this we will record in the receipt and payment account. We will minus this. Then the next question is that an amateur dramatic club was formed to provide occasional performances for the paying public on performance days, and the club sells refreshments to the public. The profits from these sales head towards running cost of the club. The following information has been provided at the end of the year. Okay, so what you need to do, what is the profit on this refreshment to be transferred to the income and expenditure account for the year, for the current year? So it's really easy. First of all, we see that what is opening inventory, purchases in minus closing inventory. So as you can see, this is the opening inventory. So we'll write the 50 plus this is purchases 490 and this is closing inventory minus 75. So sale minus cost of sale. So as you can see, this is the sale 980. And if you just do this, so we get the 465 and then this is equal to 500. So B option. Which cost is a direct cost for a manufacturer? It's too easy. Carriage outwards, no. Delivery vehicle, no. Yes, royalties. This is the part of direct expense. Okay. Then we have next question number 30. They are saying that the Sandy owns a manufacturing business and she has provided the following figures. So there are the multiple figures they have provided. And what we need to do, we need to see what is the factory's cost of production. Okay. So first of all, let's see the direct material which we used. So what we had to do, we provide the opening raw material. So opening raw material is this 90,000. Okay. Then plus purchase of the raw material. So this is the purchase 20,000. Minus closing raw material. This is closing 75,000. Oh, 74,000. Sorry. So this is equal to 36. This is the direct material. Okay, 36,000. Now we need to add the factory cost. So you can see that we have the factory rent, which is 10,000. Then we have the factory worker salary, which is 15,000. Okay, so now we will add this. Let me just add this. Because office staff salary is not relevant to the factory Okay, office rent is not relevant to the fact that that's why. This is equal to 61,000. This is the total cost of production. Okay. Then we have question number 31. They are saying that a trader provided the following information. We have the trade receivables at the start of the year, then we have at the end of the year cash received from trade receivables, irrecoverable debts written off, discount allowed. What is the amount of credit sale? Okay, so for that we need to prepare a kind of SLCA, you can say. Yeah. So 5,000 is the starting year balance plus X is the credit sale. This will be on the credit side, sorry, debit side. Then the rest of the amounts we will minus. So 34,700, this is cash received. This will be on the credit side. This is what we need to minus. Then 185 discount allowed. This will also be on the credit side. This is what we will minus. Then 200, which is irrecoverable, but we are again on the credit side. So we will minus 200. So this is like 8,500. This is 8,500. So 5,000 plus X and okay, it's 8,500. 8,500 is the traceable at the end of the year. Yes. Okay. So if you just minus these things, so you'll get 35085 is equal to 8,500. Okay, X minus 30085 is equal to 8,500. We just minus this, then we get this 30085, and then X is equal to. After that, what we will do? This is the minus here, then we will shift it here, so this will become the plus. So this is equal to 38585. We can also make the SLC if you want. This is the right answer. Oh, sorry. This is the right answer. Okay. Then we have question number 32. They are saying that Diani or whatever it is, yeah. So Diani provided the following information about her assets and liabilities. So what was the current ratio? Okay, students, it is too easy. We need to use one formula, and that is current assets divided by current liabilities. So as you can see that cash is a current asset, inventory is a current asset, trade receivable is a current asset. And if you just add these, so the total current assets is equal to 3,953. And if you see the liabilities, so we have the trade payables and then bank overdraft. So the total current liability, it is equal to how much? 2,300. So now you just simply put this in the formula. It's equal to 1.72 into 1. Okay. Then we have question number 33. They are saying that a company provide the following information about its rate of inventory turnover. What would explain the change in the ratio? So 24 times in year 1, then in year 2 this is 25 times, in year 3 this is 27 times. So higher inventory turnover means that inventory is being sold faster. often because inventory levels are lower. So inventory ki quantity is like was decreasing. This could be the right answer. Because A is like fewer sales were on credit. So a credit sales do not affect the inventory turnover directly. C is not right that the sales activity slowed because slower sales would reduce the turnover, but is increasing. Then selling price increase. So selling price does not affect inventory turnover calculation directly. So that's why this is also not the right option. So D is the right option. Okay. Then Maria uses straight line method in year one and reducing balance method in year two to depreciate her non-current assets. Which accounting principle has Maria failed to apply? Consistency. Very easy because she is not consistent. Sometimes she is using SLM and sometimes she is using reducing balance. Then revenue should only be regarded as earned when the legal title of the goods and services passes from the seller to the buyer. This is realization concept. Yeah. Okay, students. So we're just done with the questions. Alhamdulillah. So now what you have to do, guys, just share this video with those students who are not able to afford the tuitions, the online or the physical tuitions. Let me see.